Well, people, there's two things now that the stock market bulls of 2024 need to do in order to feel a lot more confident. We've had a couple of down days to start the new year. Woohoo, after a big run up anyway in 2023. You're watching the Stock Market Brief show. This is where we navigate the financial markets through the lens of technical and intermarket analysis. If you haven't done so already, make sure to hit that thumbs up. It's greatly appreciated. Let's get into today's show. Alrighty, people, welcome back to the show. Really quick PSA announcement. If you haven't done so already, if you haven't checked out the links, you can join the swing trading community. It's $9 a month, or you can pay annually to save, and we have a lot of different things there. Once you sync Discord up to Patreon, you get access to the trade ideas. You get a watch list, monthly, quarterly, daily expected moves. No, this is not an alert service, but we do have some Trading Tick Bot suites over here where do give some alerts, and then you have access to the community there too as well. We're going to start off by looking at the S&P 500 on the daily time frame. We've had a couple of days to pull back, so I anchored a VWAP up to the high, anchored a VWAP down to the low, and we're kind of, this is rising up, right? So we're inclining there, we're declining here. So right now the anchor VWAPs, they're kind of just closing in, they're contracting. So we're pulling back after a nice run up is all that is telling us. So are we going to eventually find some movement back up to the all-time highs? It's very possible. And once I go into the weekly expected moves, daily expected moves, it actually is telling me likely that we might see a bounce here in the near future there. Qs took a pretty big hit here too. We've had a few down days, right? We had this gap up day that reversed to close at the lows. We've had 3 trading days, as you can see, down to the low. So we're clearly under the year-to-date anchored VWAP, still 2 days to the downside, closing around the low of day today. And you can see this is anchored VWAP from the high is declining. The anchored VWAP from the low is still inclining at this particular time. But just remember, right, where we made a huge run and now we're starting to pull back, digest that. So it's nothing to get overly too crazy about. But like I said, there are going to be 2 things that we can pay close attention to. We talk about frequently that the bulls need to recover. Now, if we look at IWM got hit pretty severely today, right? Pretty big down day. You can tell by the big body of the candle. So from the high, you can see the declining anchored VWAP there. From the low, we have an inclining anchored VWAP. So if price action wants to come down here or pinch between these 2 anchored VWAPs, this could be something to watch where we can see a break back above or break back under as time progresses. If we look at the 15-minute time frame, this is why what I find pretty interesting is we're under the weekly expected move as of right now. Remember, if you think of these in terms of probabilities, 68% of the time we close within the weekly expected move. So the thought of this bouncing back up and playing around here for the rest of the week sounds likely. However, if we really start kind of breaking under 468, watch very closely to intraday volume, because if intraday volume, all of a sudden you'll notice, because that thing throughout the day, which you'll see a monster move in volume, and that could be the dynamic hedging that really sends price down, breaking from these weekly expected moves. So if we start to continue to break down, the daily expected move as far as risk goes is 466.27 to the downside. 464 is the 2 standard deviation move down there. If you want the exact levels, download the chart deck. It's free. There's a link in the description and in the pinned comment to do so. So what are the 2 things that the bulls need to do? Well, first, it is going to be they need to recoup the 5-day moving average. The 5-day moving average, you can see price has been going sideways. The 5-day moving average has been going up, but now it is starting to decline. Now, usually we get snapbacks and test it. And if we do get a snapback and test it, understand, okay, that is where things change. So if this is coming down and price comes up and gets above it, okay, that means you can be bullish, but bullish with caution. Why? Because the 5-day moving average is now declining, okay? So there's been times just like when price got below it, it's bearish, but with caution, and we saw a snapback, and this is where, you want to be a little bit more careful. You want to see this start to curl back up and slowly recoup it. So even if we got a shot, boom, 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 and then you see something like that, it would be much more positive, and then you could play with the trend. But as the trend goes now, the short term, it's down. It's a little extended, so watch for the snapbacks, but it is still declining. So that's one of the things. We'll talk about the next one here momentarily. SPX chart. This is just the S&P 500. outside of we just talked about the spider ETF for S&P 500. But we are outside of the weekly expected move here too with the declining. And if you want these levels, go ahead and download the chart deck. Not going to spend much time there. The second thing that we need to pay attention to here for the bulls is the gamma flip level. It's at 47.40, which means price is down here, right, over around 47.20-ish area. That means we are in negative gamma territory. And when we're in negative gamma territory, that means dealers look to sell into selling, buy into buying, which creates much more volatile price swings. Now, I use on these gamma exposure levels, if you want them, you can download the chart deck, put them on your screen. I am putting them on the SP 500 index using OANDA on TradingView. This is, continuity. So you get to see the contract kind of moving through, which it's been a little bit more cleaner. You can add them onto the XPX chart. That's totally fine, but it's been a little bit more accurate and cleaner viewing it on here. But I also, when I'm viewing it on here, I'm trading, ES, right? So I'm trading ES, but I watch sometimes these charts just at those gamma exposure levels. And you can see here, even the 5-day moving average, it held as support, And then when we broke, boom, look at all the, right? Price got above it, very small right here, but it was declining. And then it got rejected and so forth, right back down. Okay, so we're in that declining stage. We need to get back above the 5-day moving average. It needs to start turning up, and we need to hold that gamma flip level. Okay, local support, 4,700. Local resistance, 4,750 on S&P 500 using that OANDA. Okay, if we take a look at the weekly time frame, it's down 1.36% to start the week, to start the year. And where are we pulling into? We're pulling into an inclining 5-weekly period moving average. We're not too far off of it, so that could be a potential level of support. So not only are we outside of the weekly expected moves, we're pulling into 4693, 4700 area on the SPX EMA 5, which is inclining. So this tells me that if we were to tag that, I think that we could potentially see a bounce unless we really significantly see something come out that really disrupts the markets. And that would have to be one of the macro reports, which we do have some important macro data coming out this week. If we do zoom in, you can see here, we're not too far off of that level as it stands. And if we close at around the lows, you'll be looking at this and saying, hey, this is a potential 3-bar reversal pattern. And the reversal pattern that I'm talking about is known as an evening star, where you get a move up, you get somewhat of a shooting star type hanging man candle with a higher wick, and then you break down with a lower body, but you need that follow through to the downside. And that can mark short-term tops and periods of consolidation. If we look at the Qs on the 15-minute time frame, same thing goes, right? We broke down from the 5-day moving average. It came back up to try to get back above it, which is why we say it's bearish, but with caution, because it was still inclining. And guess what? Well, we snapped back down with a big gap down, and now it's starting to decline. Now, I will note that there is a positive divergence building in the RSI, and we're trading outside of those weekly expected moves. So to see a snapback, it can bring some excitement, but just understand, if we see the snapback, even get a gap fill, right? We come down, it comes down, we get the gap fill, and everyone's like, it's back. Okay, well, maybe not, right? It's still declining. So we need to see this turn around. We need to see price recoup, and we need to see something like that happen to be much more bullish in this scenario. So it's all about patience here. If we take a look at IWM, we had that positive divergence forming as well. And we have the declining 5-day moving average starting to curl itself over. At the moment, we had the dollar start to blast off here out of this falling wedge pattern, and that big move there, guess what? We've been talking about it. Can take down the equity markets. It can take down various assets. So if the dollar wants to find some resistance up here at our 102.75, where that gap is, maybe potentially back off, that's where we can get to see a little bit of relief in the equity markets. As far as the summation index go, we're starting to see that fish hook start to take place, start to curl over. So as this starts to curl over, the parabolic star might start upticking, and that can identify a potential change in trend to be made aware of. The NASDAQ McClellan oscillator crossed down below zero there too as well. If we take a look at the NYSE summation index, same thing goes. We have the negative divergence. It's starting to play out as it stands right now, and the fish hook is starting to kind of curl itself over. I want to close off though, even though that we're getting a pullback, it is an overall uptrend. So I like to look at the old full indicator, which is a much more lagging indicator. This is taking the NASDAQ composite, dividing it into the the put to call ratio, and you're applying two EMAs. It's the 21 and the 50. And when you watch when these cross over, when the green glow goes below the blue line, that could be a sell signal. And we got the last sell signal right over here. And we went down, we went up, but they went into that full-blown correction, all right, 10% correction. And then we had the bullish crossover right over here on this gap up. And that, right, led to, consolidation. And boom, we started moving up higher. And the reason why I'm bringing this up now is because we're seeing some pullback. But you'll notice that we're still actually trending here. Green line above the blue line still flowing. Like I said, right, it's a lagging indicator. So, it's something to be aware of. But as it stands here looking at this says, hey, you can always wait for strength to be bought. Maybe it comes into a prior area of, what was resistance, comes into it and it acts and holds its support, and then you buy the strength from it, boom, boom, boom. And guess what? This might be still holding, and then we take off back up to retest these highs. Maybe it doesn't even come down there, right? And we come back to retest those previously swing highs there too as well. We're still really, if we just look at the sectors, you see energy was a leader sector, utilities, healthcare. So still more of a risk off situation as we see some of the other names down there towards the bottom. Kind of a mixed board overall, but I've seen some relief on energies, but utilities, healthcare is more risk off, and we talked about that one a little bit more yesterday. That's all I got for you, everybody. See you later.